Hi everyone, Paul here, and there's no way to sugarcoat it, but it's been a pretty ugly 24 hours for Bitcoin and other markets all around the world. The notes from the recent Fed meeting were released, and everyone was surprised about how aggressive the Fed's going to be in terms of increasing interest rates and rebalancing their balance sheet in 2022. As you'd expect, markets reacted poorly. Equities in particular sold off, with the Nasdaq taking a bigger hit than the S&P. Bitcoin took an even bigger punch. Last night I was recording a video, and at that time the market was up about 2%. By the time I woke up, it was about 5% down. So that's a 7% intraday swing. And as I speak, we're about 2% down right now. So what does this all mean for Bitcoin, and what do we think price is going to do? Let's unpack some data, plan for the worst, and hope for the best. Looking at the 1 hour chart, we can see what happened in Bitcoin after the Fed notes came out. So we've been in this trading range here for about a month, between 45.5 and 52,000. And then over the past week, we've sort of been in this tighter trading range down to 45.5. Over the course of the session, we've broken through and had that acceleration to the downside. Now, the reason why we've had that acceleration is we had this really low volatility rating, which is really traditionally low. We haven't been there for almost 6 or 7 months. We also had really low volumes. So it wasn't a surprise that we kicked that low to the downside. I probably expected we were going to come up, but coming down wasn't certainly out of the question. It's a positive sign that we haven't surpassed this low here, and we haven't gone down past that 42,000 mark. So that's pretty positive. Zooming into the 30-minute chart, you can see this cascade of selling as we crash through that support level. So this is exactly the type of price action that we want to see. This is the final capitulation of those weak hands as they get shaken out. And then this bottoming formation here, or this action here, is hopefully the beginning of a bottoming formation, which will allow us to create that base plate to then hopefully trend up again higher. Not surprising, the release of the Fed notes and the resulting price action really scared the children. And we can see that in the fear and greed index. We printed an extremely low number, a 15, so an extreme fear rating today. And that was even lower than yesterday, which was 24. So we can see we've consistently been printing extreme ratings. We did print some low numbers in December, but these are really historically low levels and indicative, obviously, of where we are in the market at the moment. Not surprising, on the back of that price action, we had some liquidations of longs. So yesterday there was about, I think, 680 million, which isn't a massive number, but it's still a pretty big number. And the other thing which not many people have been talking about is there's been over $1 billion worth of liquidation since late December. So in aggregate, that's a pretty big number, and not really a surprise. You can see it's dominated by long liquidations as the markets pull back. In terms of those liquidations, after the big liquidations we had on the 4th of December, we had a really big decrease in open interest. But even though we've had consistently more liquidations over the end of December, you can see that the open interest hasn't really decreased that much. So we haven't really had a big flush of leverage from the system. If anything, after the 4th of December, it pretty much came back up, and it stayed pretty static ever since. Another interesting data point is the Bitcoin balances on exchanges. Now, traditionally, the lower this gets, the more bullish it is. We had a pickup as we came into the end of December, and then now I've had this drop off. It's not a very big drop off, but that's a pretty good sign, hopefully, that with balances going off exchanges, we're getting some bullish signals, and that may be helping us form that bottom. Another one of the things I like to look at is the options activity and where exactly the open interest and the number of contracts are being traded. So if we look at some of the data, we can see that at the moment, there's a large number of puts that are being purchased at a strike of 42,000. So it's not really a surprise that that coincides with our resistance level at 42, or that level that we want to try and maintain. The other interesting point is the amount of open interest, or the number of contracts that we have sitting at a strike price of 50,000. Now that's right in between the upper and lower trading range that we've been in since the beginning of December. Probably not a big surprise, but it's quite interesting that that's where the most open interest is starting to form. So often what you see is at the end of the month, and we're obviously a few weeks away from that at the moment, but price will start to gravitate towards that as the options market and the spot traders start to push pricing towards that. It's not always a given, but it is interesting that even with a few weeks towards the end of the month, that's where we're starting to see the most open interest start to accumulate. So leading up into yesterday, we were right on the bottom of the trading range. We then had the release of the Fed notes, which created a big surge downwards. That then triggered a cascade of selling, or some selling from the liquidation of longs. And that was all bundled up into the environment of low volume and low volatility. So we had the perfect recipe for a shot downwards, which is exactly what we got. Now, as this starts to shake out, we're looking at the 4-hour chart here. Hopefully we're starting to form a bottom. Whilst it wasn't the highest probability outcome, it was certainly one of the probable outcomes we were looking for or thinking we were going to see. Now, the positive thing is we haven't obviously eclipsed this little spike low from the previous leverage sellout we had on the 4th of December. So we've managed to hold this 42,000 mark. So that's a really critical support point for us. If we do go down into here, that's obviously pretty bad. As long as we stay above 40,000 though, it's not terminal, but certainly if we go past that point down into this region below 40,000, that's pretty bad. And at that point, the bulls are dead. What I'd expect to see from here is this base starts to form and that they will shoot up here. Getting obviously above this 45.5 resistance point is critical. And I think shooting even above 48,000 is obviously where we'd like to be to have that comfort. I think that on balance, this shakeout that we've had is a net positive. If we can maintain that 42,000 mark, this will really have shaken out the last of the weak hands. And then any rally that we have will be quite strong. Hopefully we'll start to see some of those big wallets start to come off the sidelines and start to accumulate. So the next day or so is going to be really critical. And if we can maintain this 42,000 resistance level, we're looking pretty good. And even given the shakeout, and it looks pretty grim at the moment, I'm still feeling pretty good about a bounce here. I think we're still looking at that. And whether it's a bigger one or a small one above this 45,500 mark, I think they're the most probable outcomes at this point in time. So fingers crossed for a good couple of days. I hope that was helpful, and I'll see you in the next video.